the market doesn't have anything to hold on to. There's no economic data that's going to look any good. There's no credible corporate guidance that can be issued. And, you've got this environment where markets could bounce maybe on stimulus, but they're not going to bottom until we see that peak in new cases. And who knows where that is? So these are markets simply adrift in a very choppy backdrop.
So how do you advise clients? How do you advise investors in this market? I mean, are there any safe places to actually hide? How should people be positioning themselves, especially as the moves continue to be more and more dramatic and more volatile?
Well, I think treasuries have proven their value here. It's one of the few safe havens that continues to work. But when you look at your portfolio, I think individual investors are probably best served to not think about the depth of this duration. There may be a lot more downside to go, but focus on the duration. This is a shock rather than an economic cycle that's become overextended and takes many quarters for those imbalances to correct. This is a shock and could be over more quickly than past recessions. So I'd focus more on the duration than the depth. The one thing that's interesting is individual investors don't seem to be panicking here. We saw ETF inflows into passive equity ETFs in the month of March, even through yesterday. And that's really noteworthy, especially the ones that individual investors favor, those long-only broad ETFs. And that's a sign that many individual investors are focused more on the long term than the short term hit.
Wow, that's a really key stat you just put out there. I mean, also important to note that it is the fastest bear market ever. So what sectors or what names within this market and within this very broad-based sell-off do you like the most?
It's hard to be picky here in an overall market that just swings up and down with such dramatic moves. I think if you want to think longer term, one of the areas of the market that's actually held up a little better is actually not even in the U.S. markets. It's emerging markets, Chinese stock market, and elsewhere in Asia where they may have already seen the peak in new virus cases. China, South Korea, those markets have been holding up a little bit better than average, both on the down and doing a little bit better on the up days. That might be a sign that there might be a sign of better things to come in the U.S. markets when perhaps we eventually hit that peak.
When it comes to coronavirus and all the uncertainty and how that's affecting the markets right now, what are the key data points that you're watching the most closely?
You could take a look at maybe the mortgage applications. Those are actually maybe a bright spot here in terms of putting more money in consumers' pockets. We saw retail sales, and they're showing that consumers are continuing to spend, even if it is on hand sanitizer and toilet paper. So there are some signs here in the near term we can keep an eye on. But bottom line is here, you've just got to watch those new case numbers, both overseas and within the U.S.
Okay, quickly. Are there key levels in the major averages for you?
No, I don't think so. I think it's very difficult to gauge how much deeper this could go. We just hope that the duration of it remains limited.